Good morning, good afternoon, good evening, whenever you're watching this. This is Taylor Watts from What's Investing, and today's video is another Sharesies challenge. We're on number 8, and this is recorded on the 5th of November. I'm saying that because I'm trying to schedule out some videos while I'm going away for roughly a month, so I'll try upload a video a week if I can record enough backlog for that to work. Otherwise, there'll just be a bit of a gap in the coming weeks. But yes, that's recorded 5th of the 11th. And yeah, so since our last challenge about just over a month ago, we had 115 and now we're at 127, and we have an extra referral. So that's $12 towards the fund with subscribers and $10 from the referral. So as you know from the last video, we changed our subscriber fund or kind of stock to Triple M. So we will be investing our $22 into here, but it'll also be slightly less because I accidentally bought $1.01 of it to participate in the kind of giveaway that Sharesies was doing if you invested in a US stock over $1, and I kind of did that for every stock I had just as some fun, and forgot this was a subscriber one. And we also had the dividend, which was reinvested, so it's 79 cents off of $22, which I'll be investing, which will be like 21 or something. Plus 79, yeah, 21. We'll be doing that into there. And yeah, so that is our subscriber stock updated for the month. And yeah, so we're seeing good growth in lots of our stocks, especially bouncing around with the election and different COVID lockdowns happening in the United States. But we're sitting at roughly 7%. And we have a lot of dividends coming in. We got paid one today, which was AT&T. That was about $1.76 New Zealand dollars. And yes, I'll just do a wee portfolio update here and just scroll through our holdings. So you can see that most of them are positive, apart from the these two here, which are pretty big negatives, and then little ones from the United States. And then most things are positive, looking good, and then a little bit of down, good positives. And just getting a good mix of everything. And yeah, so we also thinned out the funds to have them all looking a bit tidier and just easier to keep track of with less overlap. Yes, that's looking mean. We upped our stake in Westpac a bit as they announced a dividend, and the dividend's quite low compared to usual, but I wasn't expecting them to announce one at all, and I'm kind of using it as a savings account in a way because my savings account's normally in Westpac, but the interest rates are absolutely terrible. So I put some of my money from my savings account into Westpac stock because either way, if they go bankrupt, I'll probably lose my money. But if they don't, the dividend here is 31 cents a share, and I think that's roughly like 3%. If it's twice a year, it'll be like 5 or 6%. Or it might be 3% overall. I can't remember the calculation I did. But that's that. And my interest rate's at like 0.4, so it's like 9 or 10 times bigger. Or 8 times bigger or something like that. To just have my money in Westpac stock rather than a savings account. It's less liquid, but it makes me a lot more passive income in the long run. But I still have like my emergency money and my spending money on Westpac banking, as that's ease of use. I wouldn't want to be selling stocks every day and then not being able to do anything on the weekend. That would be a bit iffy. But yeah, we've just been upping our baseline and everything. So Tesla's gone up. We've upped our Visa, MasterCard, and Disney quite a bit. Just trying to get those lower ones to a more suitable range. I've got Nvidia up there. We haven't touched Pepsi in a while. Just been the forgotten one. We've got McDonald's coming up, Johnson & Johnson. I'm probably going to put a bit more into the S&P 500 just as an overall look at the economy. We also put some more into Fisher & Paykel, Mainfreight, Delegate Group, and all that. So we can look at our graphs here and just get a closer look. So overall, we have accumulated $81.13 for the past year and a half, and most of that being this year at $66. And we're probably expecting a huge dividend in December if we include the Westpac one announced, which was 31 cents a share, because I have currently almost 20 shares, so that's going to be another $5-6 coming our way in December on top of the like $30 we're getting from Hallensteins, and then just all the monthly stocks we have, and then most of the like semi-annual or quarterly ones paying in December as well. So December is going to be absolutely massive, and that's good to know. And then our quarter started off today, and our November month started off today as well. Sitting at $1.76, which is $1.18 at the time from AT&T. So that was mean as to see that coming in. We can see our growth looking good, and this quarter four is going to be massive. It's going to be like 50, 60, maybe even 70, maybe even 80 to be fair, all the way up there, because these four funds here will be paying pretty hefty dividends, as their last dividend was $1.80, and then it's gained like $150 there, so it's almost doubled there. So it's going to be another $3-4 there, and then most of those are similar. Then we've got these ones all coming in. Tesla doesn't pay one, but Trustpower, if they decide to pay one after their half-year report, which is today actually, I think it releases soon, if not already. So we'll find out probably if they're paying a dividend. And then most of our ones up here will be paying a dividend for December. So it's going to be massive. Pretty hyped about that. We're going to compare the month on month with blue bean last year, red bean this year. And then moving on to 2021, we can add another set of data and compare it to the year before, which is this year. So we can add another color like green, yellow, purple, I don't know. And then compare it, keep this growth going up, keep the spreadsheet growing, and keep the graphs upgrading. So at the moment, it's kind of very spiky around June and December, and of course September, as Hallenstein's dividend was delayed until here. But it's looking pretty sweet, and we'll be able to see how much it changes in December, and we'll see it flatten off for the first 3-4 months of the next year as well, as it's normally pretty flat for the type of stocks we own. There will be a better baseline, probably looking at $2 a month in those lower months, due to like Realty Income Corp, the bond market funds, that's monthly as well, and then those like super dividend ones we just got for some fun. Yeah, we can see our total dividends received over time having some huge growth here, and moving on to December, it's going to be massive. I'm real excited for it. And also just updated this, so I can actually change that to be the 5th of the 11th, 2020. I just use it to keep track when I change it. And so also didn't reorder it, so I think we select it all, sort range off column D, because that's the percentage. There we go, so now it's in descending order. So we have our Tesla sitting at 20.8%, so it's slightly less than last time, which is good. We're squeezing it. We're still increasing our stake in Tesla because I really believe in the company. I might even make it a bigger stake if if the income that I am planning on receiving during summer actually does come in and is more than expected. I will probably raise this to 25%. But if not, I'll keep squeezing it. As I'd like to be reasonably diversified as I am. But it's cool to see Hallenstein's up there at 750. Seeing Westpac creeping up as our kind of long-term savings account kind of. And then just seeing some of the funds there and the bonds. And then seeing these other ones like Mainfreight, Triple M, which is a subscriber fund, all creeping up. So yeah, if you don't know what the subscriber like stock is, it's something I started probably start of this year. Just kind of every subscriber I get, I'll put $1 into the stock. Since it's changed over to a US stock, I'm going to put $1 US into it for every subscriber, and for every referral I gain, I'll put $5 from the referral and $5 of my own money into the stock as well. So that is how we see it, jumping all the way up to, including that 21.21, all the way up to 190.7, which is pretty sweet. So I think that means we've got like roughly seven referrals on top of seven referrals on top of 127 subscribers, and then with some cheeky dividends from here and some tax rebate from the other one as well, I think. But yeah, that's looking all sweet. Happy to see more dividends coming along and seeing our portfolio grow and perform well even in the dips. taking advantage of buying low on some of these ones. I've also got another $93 here. Probably going to buy some more Johnson & Johnson as it's quite low. I think, was it MasterCard as well, maybe some Realty Income Corp, and maybe, yeah, probably the S&P 500. I want this to be a bit bigger as it does perform well in the long term, according to, historical view. But yeah, that's sweet. That's our portfolio update, our subscriber challenge, and everything done and dusted. Hope you enjoyed catching up on the journey. If you're not already, subscribe, like the video, do all that for the algorithm, yada yada. But yeah, happy investing. Let me know how your journeys are going, and I'll see you next time.